Hey, what's going on, everyone? Welcome to another video. Welcome to Valley Green. I'm excited for today's video. In the video, we're going to be talking about MongoDB, recent earnings report, and option strategies that you can utilize on MongoDB even with the most recent earning report. Quick reminder, if you could like and subscribe, that would help out the channel massively. This is a new channel, so really appreciate the support. Feel free to comment down below any other stocks or options you'd like me to go over. Happy to take a look and discuss those in some of the next videos. Now, taking a look at MongoDB, their Q3 results, and this is their income statement snapshot from App Economy Insights. Obviously, huge shout out to the Economy app. Definitely love their visuals. I've used them before, so you definitely would recognize them. So some quick highlights. As you can see, revenue for this quarter is $334 million, up 47% year over year. Subscription revenue for Atlas is about 63% of revenue. The gross profit is $240 million, roughly 72% margin, which is absolutely massive. But as you can see, their operating expenses are quite high at $323 million, so I could say they're still in that growth phase. Still have a high sales and marketing and research and development spend. So great to see. Overall customers, 39,000, up 26% year over year. Customers larger than $100,000 are over 1,500 customers, almost 30% increase year over year. So some awesome insights and overview of the income statement from the most recent earnings. So now jumping quickly over, looking at their financial results from their investor relations report. Quick things to highlight, as you can see, revenue, like I mentioned before, $300 million, up 47% year over year. Loss from operations, which is interesting to see, is $82 million for the third quarter. Cash flow, $1.8 billion in cash as of October 31st. So definitely a significant amount of cash at the moment, but cash flow is pretty neutral, roughly about negative cash flow of 8.4 million. So interesting to see. I always think these are super useful to take a look at, but as you can tell, it's very similar to the App Economy Insights visuals. So definitely just a good reference point. Quickly jumping over to the Yahoo Finance. I like quickly just, basing myself here. High level overview. As you can see today, the stock jumped up massively, up to 177, up almost 32 points for the day, up 22%. So with that, market cap for MongoDB is sitting at $13 billion. And at this point, you may be asking, what is MongoDB? I mean, at a high level, they provide database platform worldwide. They offer commercial database server for enterprise customers. Their Atlas tool host multi-cloud database as a service solution. So a lot of database as a solution kind of offerings that they have. As you can see, earnings per share negative. 1-year target estimate according to Yahoo Finance is $293. So it's definitely way below that. But as you can see on the 6-month, they had a peak of 379 million roughly in August of 2022. So not too long ago, but they've come down substantially. But the key question, could this be the uptrend? Now, taking a quick look at the chart. So in the 6-month chart, you could see here this downward slope like most of the market. But then, as you can tell, this massive jump up, 30 points today, up 22%, 20%. You can see it's still within the Bollinger Band, but now it's starting to peak above the 50-day moving average, while significantly below the 200-day moving average. So your point of view could be maybe entering a more of a bullish pattern now, which may be true, but in the long term, you could still say, since it's under that 200-day moving average, it could still be in a negative pattern, a more bear pattern. Looking at the 1 month, yeah, you can see it's just jumping above this 50-day moving average. So I'll go over some option strategies that you can utilize given the position that the stock's in right now, and depending on your perspective of where the company's going to move, you can utilize one of the strategies. Now going over to Option Strat, this is one of the great tools that I use all the time to look into option strategies, kind of the profit and loss and setups for them. Feel free to grab a link in the description below for Option Strat. It's an affiliate link, so much appreciated support. So go to Option Strat, you'll click on Build. The first strategy I'll look at is a cash secured put. This is definitely income producing strategy. It does have an unlimited loss per se, but it's one that I definitely love. So what are you going to do for a cash secure put? You're effectively saying you're going to put up the collateral to potentially purchase MongoDB at X price. So in this scenario, MongoDB just shot up a ton, and it maybe continue moving forward in that bullish pattern. So I may be saying, I'd be willing to purchase MongoDB if it came down a little bit. Earnings were great, their growth is great. Maybe they're going to continue on that upward trend, but I still may be saying I want to purchase MongoDB at a slightly cheaper price, at a slightly better price. So in this scenario, I'm going to set a strike price. So that's 165 here. And this is me saying I'm willing to buy MongoDB. I'm going to sell this put. I'm willing to buy MongoDB at 165. And today, if I sell this put, I'll collect a net credit of $600. And with this option, there's 10 days till expiration. So I'm just saying over the next 10 days, I'm willing to buy MongoDB for 165 if it goes to the strike price or below. As you can see, theta here is 0.52 and there's a delta of 0.31. So if you sell this option, if you sell this cash secure put on MongoDB, you would collect $600 today, but you would have to put up $16,500 of collateral. If the stock ends up being 190 and it continues on this upward trajectory, then you would keep this premium, nothing would happen, and the option would expire worthless. If you do that and you collect the $600, that would be a 3.6% return in 10 days. In about a month, that's almost a 10% return. So I would say that's awesome. If you're still bullish, but you don't have $16,000 in your account, you could do something called a bull put spread. So I'll quickly walk through that. So what you're going to do is you're going to select two strike prices. You're going to sell one strike and you're going to buy another. So what's going to happen here is, let's say you think MongoDB is bullish. You think it's going to go higher than 175 after hearing the earnings report, and you're excited for the upward trajectory, and you want to sell an option, or you want to do an option on MongoDB. You can't sell a put because you don't have $16,000 in your account. Totally valid. So something you can do is sell or exercise this bull put spread. Effectively, what you're going to do here in this example is sell a 165 put, and you're going to buy a 160 put. So all the money that you're risking is this 5-point spread between the two strike prices. So in reality, the margin you're putting up is $500. You could select strike prices even lower. You could do 160, 155. You could do 160 and 150. For this example, I'm going to do a 5-point spread. So I'm going to do 160 and 155. So, you can tell here, stock's trading at 176. So in the next 10 days, if you do this option, you sell the 160 put, you buy the 155 put, you're putting up $500 of collateral, and you're getting $120 today. That's a 24% return. So that's assuming the stock maintains the current price and doesn't go below 160. So 24% return, 10 days, not horrible. Let's go even a little bit more conservative. Let's say for whatever reason the stock, comes back down relative to after the massive jump that it had. You may not want to trade these options because there's a wide bid-ask spread, and it's not advantageous. You probably don't want to trade this type of option. But if you want to be a little bit more conservative, and you did this option, you'd collect $75 today, and you'd be risking $500. So that's a 15% return in 10 days. Now going on to January 20th, January 13th. So now going out to January 20th, even further, about 45 days out, which is kind of the sweet spot in my opinion where you want to utilize these types of strategies. Let's see what you can do here. So if you bull put spread, you put a 160 and a 155. Here you'd collect 165. You'd be risking $500. That's a 33% return in 45 days. So again, you can be a little bit more conservative. You can lower your price, but there's also opportunity. You can be a little bit more aggressive. If you're confident in the bullish pattern that MongoDB may continue moving forward in, then maybe you do this bull put spread, also known put credit spread, where you sell a 170 put and you can protect yourself. You buy a 165 put. So here, you would collect $210 today and put up $500. That's a 42% return. That's a pretty solid risk to reward ratio in my opinion. You'll see here the delta is 0.34, and you'll see on the 170 the delta is 0.38. So interesting options. This is definitely what you could utilize if you're bullish on MongoDB. Now, if you're bearish on MongoDB and you think it may come down based off after this massive jump, I'll walk through this other strategy that you can utilize. So taking a look here, what you would be doing is you'd effectively be selling a call, and then on the other end, buying a call, protecting yourself. So here you're assuming MongoDB is going to remain neutral or go down. In this scenario, in this example, you're hoping MongoDB stays below 185. So in this scenario, 45 days, January 20th expiration. If you sell this call and buy this 190 call, today you would collect $205 and you'd be risking 500. So that'd be a 41% return. So pretty solid. If you want to be a little bit more conservative and you want to increase the strike price, I'm going to go all the way up to 200 and 205. Doesn't even go that high, those increments. So what you would do is if it's a 10-point spread, sell a 200 call, buy 210 call. So in this scenario, your spread's 10 points. So you're actually risking $1,000 of margin, but that's still better than $16,000 that you would have to put up if you were selling a cash secured put. Again, you're bearish in this scenario. So what you would do is if you do this option today, you would collect $270 and you'd be putting up $1,000. So that's if the option expired worthless by January 20th and the stock was below 210, nothing would happen. You would keep this $270, the option would expire worthless. So that'd be a 27% return in 45 days. Honestly, not too bad in my opinion. You just have to determine if you think MongoDB is going to remain bullish or it's still in that bearish pattern. Hope you liked the video. I know this is a little bit shorter. Would much appreciate it if you could like and subscribe. Be on the lookout for future videos, and definitely let me know in the comments below any other stocks or option strategies you'd like me to cover. Hope you have a great day. Thanks.